Hi and welcome to the Market Alert for Monday, the 25th of July 2022. So bonds and Bitcoin soar on week as dismal data drives dovish dive in rate hike odds. Yeah, what they're talking about there is that the market's pricing in a full rate cut in quarter one, so that's January of 2023. So they're going to continue to raise rates as long as they can. But the forecast at the moment is that they'll only manage it until the fourth quarter. And we'll get onto that in just a minute as well. US PMI crashes into contraction in July, a worrying deterioration in the US economy. This is all out on Friday. Futures rally Fizzles as a volley of disappointing earnings and economic news. That was on Friday evening. We saw the markets move lower. PMI signals Eurozone recession. Day after first ECB rate hike in 11 years. Well, again, no surprise, is there really? And this one, because the court case is going on at the moment with the three JP Morgan traders that are in court for spoofing the silver price. As it says in this headline, despite manipulating precious metals prices, JP Morgan is still at the heart of the LBMA, the SBMA, and the Fomc. So it's a bit like putting a bank robber in charge of the bank, isn't it? Which is why they pay the fines and then they continue to do what they've been doing for years. Economic news this week. Well, the big one, of course, is the FOMC on Wednesday. It looks like we have a forecast of 0.75% increase, or 75 basis points. That's Wednesday evening. We'll just have to wait and see. There has been talk of 100 basis point rise or increase, or 1%. So we'll just have to wait and see. But that's the big news of this week. Today we've got German business info climate. That's forecast to be lower again. So the news is starting to turn now on the economic front, as we saw on Friday. Gold silver ratio spiked up on Friday as the gold price stabilized and silver was once again crushed at the close, or just before the close. So you can see we're back up at 93, which is staggering, frankly. But there you go. That's what's going on in the metals at the moment. Okay then, so in the markets for Friday, we'll start off with the Dow. We can see that we made a new high on Friday, but the market came off, as we can see with the close. The market's found a bit of support at the 50% retracement during the overnight, where the market's pulled back there. It is also a 5-bar moving average there as well. The retracements are drawn in from the low to the high, and then over to here you can see these retracements here. If we do move to the downside and we take out the 50 EMA, which ties in with the 78% retracement, then I will redraw this from here and then put in a set of fibs over here. If we move to the upside, well, I'm looking for this high of Friday to be taken out. As also, if we go from this high down to the low here, you will see that we have a set of longer term fibs there. You'll see the market is struggling with the 62% retracement on the upside, which is there. You can see we're just below this once the market traded back down below this on Friday. This has now once again become a resistance level. If we look at the bigger time frames just for a second in the weekly chart, you can see that we've traded up to 62% retracement from here to here as well. That's the same retracement that you see in the daily there. And if the prices continue to move, we've got problems at the 78 and 89, as this ties in with the 20 and the 50 EMA as well. Monthly chart, it's worth a quick look as well. We're starting to see a bit of support coming into the market at that 50 EMA last week. And also we have a 62 and an 89% retracement as well of the market from here back to here as well, and then longer time frame as well. So 30-minute chart, just to see an insight of what happened on Friday. The market moving up all the way through the pre-market electronic session for the Dow. We opened, we had a bounce, we had a retracement, and then we had a sell-off going into the early evening and towards the close. Overnight, the market is in a sideways range, currently struggling with the close of Friday and also the 20-bar moving average there, so stuck in a sideways move at the moment. We certainly, if we're going to move to the upside, we want to hold at the 89% retracement, and that we've got 62 at the moment, but certainly 78, 89 if prices are to hold. We saw some buying coming in overnight here, moving to the upside. We're currently overbought, so we are in the corrective phase there for the Dow. In the German DAX, also you can see resistance at the 78, 89 that we've had drawn in over the last week, and also we've got the 50 EMA, we've got some supply coming in there, and Friday we've got some selling as well. We're also overbought, so like the Dow, I'd be inclined to draw in some fibs here. We're already through 38, looking at support at the moment from the 50, and then you've got the other fibs here as downside targets as well, all the way down to the important one of 78.89, where we have the 20-bar moving average as well. And it's about tying all of these things in together, looking for these support areas. In the weekly chart, also you can see that Friday we took out last week we took out the 200 MA. Markets failed to hold at this level, so again we've got fibs on the downside just in case prices move lower. Notice again that the 38 ties in with the 5-bar moving average there. And the monthly chart, we can see that we have some support there, double bottom, with the market finding support at 78% as well in the short-term move of this market from here to here. In the 30-minute chart for Friday, the market was just a one-way bet all the way up in 30 minutes, all the way to Thursday's high. Market then came down with the Dow down to the 200 MA and eventually broke, as you can see, overnight. So now the 200 MA, the 50 EMA is offering some resistance along with the close. So any attempt to move higher is going to see this as a bit of a struggle. Also watch, we're at Friday's low as well. The low is very important. You can see how they bought back here overnight to get prices back above the low. A convincing break below this. We'll see the market continue to the downside, which again is why it's important to see what you've got on the downside in the daily chart. If the 30-minute low is broken, switch to the daily to see where those targets could possibly be. And in the 5-minute chart, despite it looking very smooth in the 30-minute, very choppy in the 5 minutes, which led to a bit of an in and out trading session during Friday. But on the whole, still a great week, which we'll have a look at in just a second. So there's the start of the down market coming back, finding resistance at 89, was overbought with divergence, and then the market just making its way down during the evening there. Just have a quick look at the results. So on Friday, 228, so with a 3 profit factor there, 70-30 on the win-loss ratio. For the week, a profit factor of 2.82 and net of 76668, again with 68 to 32 win-loss. And then for the month, as we're heading into the end of the month, profit 2233, a profit factor of 2.14, 60-40 on the win-loss. And then from January you can see at 22,350, profit factor of 2.34, and we're at 55-45. So you can see how it all pans out over the longer term, and shows the equity curve moving to the upside nice and steady. So moving over to the US, the S&P also trading a 62% retracement from its main swing, which you can see there. Market coming back down towards the low, holding above the 50 EMA at the moment for the S&P, finding a bit of support there, trying to get back above that 5-bar moving average as well. The 30-minute S&P, it was just ticking along nicely. We had a market put in the high of trading to the high of Thursday, which is this one. That's the new high for Friday. So we saw Thursday's high hit, market coming back, and again overboard, divergence, and then moving to the downside, and that's how it's been since. Again, notice how the market has put in a low here that you want to keep an eye on as well at 39. I think that's 3938. So you'll see there. So very important that we hold at this level, and if we don't, then we go down and have a look at the overnight low. In the UK market, sideways, closing below the 5-bar moving average on Friday in the daily chart. Here's your fibs on the downside with your 20-bar moving average tying in with the 50% retracement there. Like I say, these are very important where you've got two indicators converging, and what you would do at this point is switch down to a 30-minute, then to a 5-minute, and then down to a 1-minute to find the potential entry price with limited risk. So you can see there that the FTSE stuck in a sideways range, a bit choppy there on Friday. It's not a market that I trade. I prefer the DAX and the Dow. And then up to Thursday's high, following the other stock markets to the downside. At the moment, again, you've got that low there. And switching to the currencies, the yen down on Friday, the dollar having a bit of a rest on Friday, impacting the other currencies. Dow trading down to 78% retracement, currently trading below the 5, 20 and 50 EMA as well. We've got the 78.89 in here, and we're currently overbought as well, so the market's got a bit of breathing room to come back from a technical perspective. Friday, you can see the market struggling at the DP, and then closing below the average there of the 50 EMA, and then making its way to the downside, which you can see there as well. Meanwhile, in the pound, a bit of an up and down day, struggling with the 20-bar moving average, still closing above the 5, but trading below it on the overnight. Fibs to the downside, measured in from here to here, and let's see if they hold. Of course, we're going to have a rate increase from the BOE later this month as well. Well, later this month, we've only got this week, haven't we? So don't be surprised if we see a rate increase this week or next week as we go into August. So there's the pound as well, sort of sideways to lower. And then finally, we're back with the metals, and you can see Friday, the silver price coming under pressure once more. Expect further pressure on this, as I've said already. I'm looking down in these levels here. They're still not done on the downside. Well, I hope not anyway, because I've got some buy orders, both on CFD, but also physical silver as well, to be alerted at these sort of prices. Not that I'll get them at this price, but I'll be alerted on this price, and then I'll move over to the bullion dealer to have a look, because we're reaching a situation where it is so out of love and unloved by everybody that they're the markets eventually that break. And like I say, it's 80% cheaper than it was in 79. It's a no-brainer when it comes to value investing and looking for something that is seriously cheap. So I'm not bothered. They can do whatever they want. They can send it lower, and I don't mind if they do. Actually, I'm hoping and praying that they do to make it even cheaper. The first time I ever traded silver was back in 91 when it was $5 an ounce. So again, it gives you an indication of how undervalued this is compared to everything else that you want to buy at the moment, whether it's building materials, houses, etc., etc. Everything is seriously overvalued, seriously expensive, and the only thing on the planet that isn't is an ounce of silver. And again, you've got that ratio of 90 to 1. You can get 90 pieces or 92 pieces of silver for 1 ounce of gold. Incredible. You won't see that forever. You certainly won't, not as the system starts to fall apart, which we're starting to see now. So everything was okay in the pre-market session. As you can see there, the market was sideways and even attempting to move higher, and then they slammed it as they usually do in the afternoon, bringing the market down to a low here below 1850, which you can see there, and already starting to look weak. Wait till we get to 1 o'clock and they start moving it to the downside once more. Gold holding out a bit stronger there, which is why you've seen the gold silver ratio move up. and also way above the 38 and the 5-bar moving average at the moment. And in the 30-minute, you can see that the sell-off in gold was nowhere near as severe as the 30-minute sell-off in silver, where it took out the low. You can see that there. You can see how it moved below it. And if you go back to gold in the 30-minute, you can see never even took it out, did it? And that's why in the gold-silver ratio you see that big spike, because silver price was hammered more than gold. What a surprise. What a surprise. And in the dollar, moving sharply lower on Friday, which again, there's an irony, isn't there? You know, the dollar's down and so is silver and gold, but silver being monkey hammered. Starting to bounce a bit there, so again, another excuse to move prices. And don't forget, we've got the rate increase coming on Wednesday as well, and that's bullish for the dollar. So that's going to have an impact on silver prices and gold prices this week. Crude oil still above $100 a barrel, barely, 102. Prices still aren't coming down because it's traded in dollars, I suspect, and forward buying, etc., etc. But you can see at the moment the market below 38 needs to hold at 50, which ties in with that magical $100 per barrel level there. Okay, that's going to do it for this one. It's going to be an interesting week with the rate rise. No major economic news today. The market will find its own direction, no doubt there, but a weakness around at the moment. See whether the market prices in the rate increase or not. Will be seen when we get to 7 a.m. Okay, that's it for this one. As ever, thanks for watching. See you in the next.